Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Exchange volumes down, but Binance holds onto the #1 spot. Bitcoin cash fork seems inevitable. Vitalik unveils Ethereum 2.0. The SEC closes submissions for comments on the ETF. Crypto causes big waves in the Marshall Islands. With the market showing some new signs of life, we have a big show here for you. I'm Crypto Manran, and tonight, like every other night, here at CNBC, we're all in on crypto. So stay tuned or hit that subscribe button now. Let's take a look at the stories making crypto news headlines. Exchange volumes plummeted in October, with some major exchanges reporting volume declines of between 30 and 50% between September and October. This is the biggest monthly decline in over 18 months. CNBC has obtained data that shows that while Binance has kept the #1 spot, even its monthly volumes are down over 32%. Other major exchanges were also hard hit, with OKX reporting a negative 42% and Huobi battling with a negative 47%. Whereas some attribute this to the stable and boring Bitcoin market, others are saying that the retail volume has dried up and that the institutional money is coming in over the counter, and that's not affecting the exchange volume. Joining me to look at whether the exchanges are suffering and whether it is the over-the-counter market that's winning is CZ, CEO of what is today the biggest exchange in the world. CZ, welcome back to Crypto Trader. CZ, our reports show that exchange volume is down almost 50% from last month. Are you guys feeling the pinch? Are you guys worried?
Not really. It depends on how you compare the volume or when you compare the volume to. If you compare them to July, August, it's probably down a little bit because now we're very stable. The price is very, very stable right now. When there's no movement in price, people trade less. So that's kind of understandable. Compared to January, we're probably down 90%. So we only have 1/10 of the trading volume compared to what we had in January. But compared to like a year or 2 years ago, we're still trading a huge volumes compared to if you compare it to 2-3 years ago, the volume here right now is great. And there has always been hundreds of exchanges in our space, or even thousands of exchanges in our space. So it's okay. Business is still okay. We're still profitable. We're still a very healthy business.
Now, it's easy to say that when you're sitting at the top of one of the biggest exchanges in the world, but let's look at the other metric, and that's new accounts. Are you guys still opening new accounts at an accelerating rate?
So to be honest, I think we're definitely still signing up new users. It's not as fast as in January or February when it was really, really crazy. But I think that was just a very crazy period. I think right now we're still signing up a steady amount of new users every day. So it's from what we're seeing, it's very healthy actually. The other thing, from a new user, and also the amount of crypto that we hold is increasing very steadily. So if you look at our cold wallets, the amount of BTC we hold and the amount of especially for BTC, because it's a constant volume coin. But we have just seen an increase in people depositing Bitcoins to our exchange. And the same thing almost across all the other cryptocurrencies we hold, ETH, everything else. So that's a very good sign. So I think the market is definitely in a slowdown period because the price has been so stable. There's less trading, but every other indication is quite healthy.
Are you saying that more people are trusting Binance and trusting exchanges to hold their Bitcoin?
I think, at least that's what we see. I mean, in theory, when the trading volume decreases, the stability is stableness in price. People are trading less, so they should be withdrawing coins into their own wallets. But we're seeing the reverse, at least for us. But for example, when we see an increase in BTC holdings over time, that means most likely people are not moving BTC to us. So I don't know if that's the same situation with other exchanges, but that's a very obvious one for us.
CZ, some people are saying that the retail investor volume has dried up and that there's a new market, the over-the-counter market, which is bringing in all the institutional money. Do you think that the new market is indeed the over-the-counter market?
I think that's very possible. What I heard is the OTC market is at least as large as the online reported volumes. So there's at least 50% of volumes that's not being reported on CoinMarketCap. But we're not very heavy into that business. So we don't know the real volumes.
Okay, now let's look at the possible catalysts for new volume or for a bull run. We've had a whole lot of good news. We've had BAT coming in, we've had Fidelity coming in, and a whole lot of other good news, but none of this is moving the market. What could be the catalyst for some market movement?
That's a very tough question. I really don't know because it's very hard to predict which one will be the trigger. If you asked me 2 years ago what's going to be the killer app, I would not be able to say ICOs. The ICO market has cooled off a bit, I think, which is very healthy because it was too easy to raise money through ICOs. I think projects should spend a little bit of effort to raise money. So I think now that's actually quite healthy. But I'm surprised as you. I have the same question as you, which is basically I see all this good news, but the price is not moving. People are not moving in. But I think the institutions coming in should be a really strong trigger. We're seeing more stable, regulated stable coins. We're seeing a lot more healthier projects now. But I don't know why the price is not moving. So I actually don't know what's going to be the catalyst. But it will happen sooner or later. Something will trigger it.
Now, CZ, last year we saw hundreds of exchanges entering the market. Do you think that with the volumes down, that the exchanges are starting to suffer, and that the lure of opening a new exchange may not be as big?
I think starting an exchange is always a really bad idea, to be honest. It's never a very viable business model, to be honest. The chance of success is very low, probably lower than most regular internet startups. Exchange is one of those hard businesses to start and run, regardless of the market condition. So I think right now people definitely slow down a bit, but there's I believe there's still more exchanges than there are coins. So there's still more people trying to do exchanges than actually starting starting other projects. But running an exchange is really, really difficult. You got to get security right, you got customer service right, you got to have the system product easy to use for everybody around the world to have fast access. All of those problems are extremely hard to solve. So for anybody who wants to have a healthy lifestyle, I would never recommend them to start an exchange.
CZ, what do you think it is about Binance that has put you at the #1 spot and kept you there? What's that secret sauce that keeps you ahead of the competitors? Is it new tokens? What is it?
So I think the secret recipe is that there is no secret recipe. I think everybody saw what we did and what happened to us. I think we got very lucky in the early days. We had a decent product and we had a okay customer service. But luckily for us, the industry benchmark at that time was much lower. So you hear very, very, very often that people submit a ticket on some other exchange, they'll wait for 2 weeks or 2 months for a response. And we try to respond to everything within 24 hours, and that was already quite good. I think our product is very, very fast and very secure. So I think security is a big, big thing in the crypto industry. But I think last year we got very lucky. But I think today the thing that keeps us going is really our value system. We have a very strong core value of protecting users. And we don't just say that. We do many, many really hard things to protect users. Like very recently, an incident with Wax, another exchange, the funds got stolen and somehow going through five or six addresses ended up on Binance. And we had to freeze it very quickly. So some of those are very tough decisions. And then I can guarantee you, sooner or later, the owners of those accounts will start Reddit and Twitter threads complaining, etc. So all of those are very hard decisions. But we always try to do the right thing of protecting the users. So it's that value system where our entire team kind of is completely following. So a lot of decisions are not made by me anymore. And so I think people get that in the industry. So we have a good brand right now. And luckily we're big enough that doing the right thing, making money very transparently, just on the trading fees, will be the best for us anyway. So we're no longer a small company that we want to make some quick money somewhere.
Like it or hate it, Bitcoin Cash has been the catalyst for a market run this week. Bitcoin Cash has been on a run from a low of $415, and it's run now over 50% on news that there may be a hard fork ahead on November 15th. The hard fork seems to be as a result of two camps within Bitcoin Cash. with differing opinions on, surprise, surprise, block sizes. Joining me from Seoul in Korea is Roger Ver to discuss what's going on at Bitcoin Cash. Roger, we're getting reports that there are two camps in Bitcoin Cash, one with Dr. Craig Wright and Calvin Ayre, and the other with Jihan Wu, Amaury, and yourself. Is that true?
I think where we're at today is that Bitcoin Cash is so decentralized that there's so many people arguing about what the future of Bitcoin Cash should be. But the nice part about it is that all of them agree it should be usable as cash. And that's actually why I'm wearing my Coinbase shirt from years and years ago that says accept Bitcoin. And that was back when there was only Bitcoin and Coinbase was busy talking about using Bitcoin as cash. And so even though there's lots of arguing within Bitcoin Cash, we all agree Bitcoin should be used as cash. And that's why we all support Bitcoin Cash.
Okay, so let's look at what Dr. Craig Wright wants.
I don't know. It changes with the day. Craig Wright's his own person, and I can't figure him out, to be honest.
Okay, what does Calvin want?
Calvin, I think, is a businessman and wants Bitcoin Cash to be usable as cash for the world, and I'm on board with that goal.
Let's look at the technology. What are the technological differences between what the two camps want?
So I think the big technological arguments there are that one camp, the Craig Wright in-chain Calvin Ayre camp, they want 128 megabytes as the maximum block size right away, this 15th. And the other camp's like, oh, let's do that a little bit later. There's no hurry for that. And then there's some other arguments about a couple of opcodes. And one group wants them right now today. The other group's like, oh, we'll do it, next May. And so it's basically just an argument over the order of operations rather than any fundamental differences. The problem is on the internet, as we both know, people can get real heated and things can devolve into name calling rather quickly, unfortunately.
So are we saying that a hard fork is inevitable on the 15th of November? Or do you think that there's any way that between now and then there's going to be agreement?
We don't know until it happens. But to be honest, my best guess is it's going to wind up being a lot like Y2K. Everybody was all worried that everything was going to fall to pieces in the year 2000 and nothing happened at all. I kind of think that that's probably how this 15th is going to play out. I think pretty much nothing's going to happen at all and the world will move on is my guess. But we won't know for another, about a week there.
Roger, do we have a second chain? Is there code on GitHub? Is there a new chain actually coming online?
Possibly, but you need to mine that chain too. And if the coin isn't being used in commerce, there's not going to be any sort of value. And that's why I've been preaching from day one that Bitcoin needs to be usable as money. People should buy, spend, save with it, do everything with it. Except Bitcoin as money has been my slogan the whole time. And if one of these two coins in this potential fork isn't usable as money, it's not going to have a value. And if it doesn't have a value, people aren't going to mine it. So I think there may be a, quote unquote fork, but everybody goes down the same path with the fork in the road. And but we'll find out. Maybe I'm completely wrong on that. We'll all get to have the fun time of seeing it firsthand very shortly.
Roger, I bet the question on all our viewers' minds is, which side are you on? Are you supporting the notorious Dr. Craig Wright, or are you on the other camp with Jihan?
I'm on the side of Bitcoin being usable as cash for the world. And I think everybody is, but they have different agreements, different opinions on which one of those two camps are best able to achieve that goal. And from my perspective, I think the ABC camp is better suited to that. But again, I'm in favor of anything that works to bring more individual economic freedom for every single human being on the planet. And that's why I'm involved in cryptocurrencies at all.
Roger, what's good for Bitcoin Cash is one coin with one direction trying to get merchant and consumer adoption of the platform. Anything else is a split and surely damages the ecosystem.
Yeah, I really agree with Ryan Charles. Sorry, it's been a long day. His take on the whole thing is that we need to have money for the world, worldwide money, and that doesn't mean splitting into 1,000 different forms of money. And it means that the money that you like needs to be usable for the people that you don't like. So I would prefer not to see there be a. If there's a split, that's the freedom that cryptocurrencies afford people. They can use whatever money they find the most useful to them.
So is this a battle of hash rate with CoinGeek on the one side with lots of money and lots of hash rate, and Jihan on the other side who's also got lots of money and lots of hash rate?
It's a battle of hash rate, but it's also a battle of acceptance as money, and it's a battle of the community that's using it as money, and that's why there's so much fighting going on, because there's no single place you can point to and say this controls everything. If there was, people would be pointing at that, but there is no central point of command. And the fact that so much infighting is happening within Bitcoin Cash shows that it's a really decentralized network of businesses and people and groups. And the fact that you don't see as much fighting happening in other coins mean that maybe they're a bit more centralized.
Last week at the DevCon event in Prague, Vitalik unveiled plans for the so-called Ethereum 2.0. But before he revealed the big plans, they kicked off with a song about what hasn't worked at Ethereum. Let's take a listen.
Well, he's Vitalik, non-giver of ETH, non-giver of ETH, he won't give you ETH, he's Vitalik, non-giver of ETH, you should always assume that he's not giving ETH, but he might give you some useless Ethereum tokens. Vitalik, everybody!
After the song and dance, it was time for some serious business where Vitalik unveiled plans for what they called Ethereum 2.0 that was born only when they wouldn't be burdened by keeping the current version of Ethereum as the base. He spoke about imminent major improvements, including proof of stake, scalability through sharding, and many other improvements. Let's take a listen to what he said.
How are you? Happy anniversary of the Satoshi's white paper, 10 years. Yeah, so what is Ethereum 2.0, first of all? Ethereum 2.0 is this kind of combination of a bunch of different features that we've been talking about for several years, researching for several years, actively building for several years, that are finally going to come together into this one coherent whole. And these features include proof of stake, Casper, scalability, sharding, virtual machine improvements, EWASM, improvements to cross-chain contract logic, improvements to protocol economics, and like really the list goes on, and there's some power law distribution. So lots of great stuff. So soon, something which is totally not going to be called Casper, Serenity begins. Yay! Right, so what is Serenity, right? So first of all, it's a realization of all of these different strands of research that we have been spending all of our time on for the last 4 years. Sharding, EWASM, and all of these other kind of protocol research ideas. This is a new blockchain in the sense of being a data structure, but it has this kind of link to the existing proof of work chain, right? So you'd be able to, like, the proof of stake chain would be aware of the block hashes of the proof of work chain. You would be able to move ether from the proof of work chain into the proof of stake chain. Serenity is also the world computer as it's really meant to be, not a smartphone from 1999 that can process 15 transactions per second and maybe potentially play Snake. And it's still decentralized, and we hope that in many metrics it can be even more decentralized than today. So for example, as a beacon chain validator, your storage requirements at this point seem like they will be under 1 gigabyte as compared to something like 8 gigabytes of state storage today, and the 1.8 terabytes that trolls on the internet seem to think the Ethereum blockchain requires for some stupid reason. Expected phases. So phase 0, beacon chain proof of stake. Phase 1, shards as data chains. So basically the idea here is that this is where the kind of sharding part turns on. Phase 2, enable state transitions, and this includes enabling the virtual machine, enabling accounts, contracts, ether moving between shards, all of this cool stuff. And phase 3 and beyond, iterate, improve, add technology. So expected features, pure proof of stake, faster time to synchronous confirmation, so about 8 to 16 seconds. Under a synchronous model, you should be able to treat one block as being close to final. Economic finality and safety under asynchrony comes after 10 to 20 minutes. And fast virtual machine execution via EWASM, and hopefully 1,000 times higher scalability, we will see. Post-Serenity innovation, improvements in privacy, cross-shard transactions, semi-private chains. So the idea here is that if you want to build some application where the data is kept private between a few users, you could still dump all the data on the public chain, but you would just dump it in an encrypted form. Or you can dump hashes of it and use zero-knowledge proofs, like your choice. We want to, and we do have a door open to kind of upgrade everything to Starks. Now, what's next immediately? So what happens before kind of the big launch? Well, First of all, stabilizing the protocol spec, but I think we're actually not that far from a release candidate of the spec, at least for kind of limited portions that don't include state execution. So we'll see. So launch, there we go. I mean, that's basically the milestone that we've all been waiting for, that we've been working toward for the last 4 to 5 years, and a milestone which is really no longer so far away. So thank you. What? Oh, sorry. Okay, enjoy.
Now, this is not the first time we've heard big plans for Ethereum, and during his address, Vitalik avoided talking about anything to do with timing. So I tried to catch up with him to ask him some serious, hard questions, and despite committing to the interview, he never arrived. So I guess, like everyone else, we're going to have to wait and see whether Ethereum can deliver on its big plans. In the meantime, I caught up with Erik Voorhees on the last day of DevCon to see whether he was excited or even convinced about what the good people at Ethereum were doing. Erik, so we've been here in Prague for a few days. We've seen all the big plans for Ethereum 2.0. How excited are you about, or how bullish are you about what's going on at Ethereum?
Whenever I come to these events, I get reminded about the actual interesting work that's happening. In the normal social media, there's always a lot of hype, and you can never really see what's real. But you come to an event and you see 1,000 super talented people all working together on really cool problems, and it reminds you why we're here.
Working their way down. There have been a lot of people that have been saying that Ethereum can't scale and things are taking too long.
Yeah, I mean, it'll either happen or people will move to other blockchains and other cryptos, and that's fine too. I mean, this is a hyper-competitive industry where people are building the future of finance, and there's plenty of incentive in all directions. So yeah, I mean, all engineering overcomes challenges that are in front of it, and I think this will be no different.
And do you think that Ethereum will be one of the main chains? I mean, having seen what you've seen here.
Yeah, absolutely. It has the network effect and probably more developers than any other chain in the world by a significant margin. That alone might be all it needs.
And when you see Vitalik, and he's really a central point in this development or in this protocol, I mean, do you get the feeling that this whole ecosystem is centralized around Vitalik? Do you think that the ecosystem would be what it is without Vitalik in the center?
I mean, obviously he is a point of centralization, but if Vitalik got hit by a bus and disappeared, would Ethereum go away? No. I mean, it would get cut in half in price for a month or so, but Vitalik doesn't run Ethereum. He doesn't control it. He's just a major influence, and he's a brilliant person, so Ethereum is better because he's involved.
So I always say that there's two markets in crypto. There's a retail market, which is worrying about prices and speculation around the pricing. And then there's what we see over here. And we're seeing PhDs and developers really building stuff. So I'm not going to ask you any questions around whether you think we're going to get out of the bull and the bear market. But I want to change the narrative. Adoption of crypto. Mm-hmm. Real life adoption of crypto. How far away are we from real life adoption of crypto, real world?
It's a gradient. So it's not like it doesn't just happen suddenly. It's not like we wake up someday and then everyone is using it. It's that people at the margins find different use cases for it, and over time the world just becomes more comfortable with it. Same way with the internet, people didn't just all of a sudden wake up and be online all the time. It's something that happens over 2 decades. So I think one of the early things that'll actually get mainstream adoption happening in Ethereum is these game assets, non-fungible tokens, and these tokens that basically represent game assets are going to be really popular. I think CryptoKitties kicked off a huge trend, and that's going to bring a lot of people that don't care at all about the crypto side into crypto.
They won't even know they're using crypto. They'll probably just be buying ERC 721s or skins or some kind of collectible without even knowing that it's a crypto. I mean, is that the world we're heading towards?
Yeah, that's one branch of what takes this stuff and makes it popular.
And where else are we going to see adoption? So gaming is one of the big points. Mm-hmm. We've seen a little bit of adoption around Bitcoin and a store of value. Mm-hmm. Which other verticals are going to be adoption verticals?
I think borderless finance generally. So all the financial tools that exist on Wall Street are being built on decentralized blockchains, and that allows anyone in the world to have access to financial derivatives. That's super powerful, and I think that'll be something that really takes off as well.
Erik, it's always a pleasure having you on Crypto Trader. Thank you very much.
Thank you.
The SEC closed submissions for comments around the proposed Bitcoin ETF, and specifically the ETFs that had previously declined the ETFs, and then reversed their decision. With all that said and done, it's not these ETFs that the crypto community is banking on, but rather the ETF proposal that has been submitted by Van Eck. Tonight I have Gabor Gurbaks joining me, and he is the Director of Digital Asset Strategy for Van Eck. Gabor, you've got a big weight on your shoulders. You're the Director of Digital Asset Strategies at Van Eck, and the whole crypto community has got their sights set on you guys, or their hopes set on you guys, for getting the first Bitcoin ETF. How close are you?
Well, America wants a Bitcoin ETF, so we're close. It really depends on the SEC whether and when they're going to approve it. The final deadline they can approve this ETF or deny it is in 2019. The next decision upcoming is December 29th this year.
Okay, so what's happening on December the 29th, and what's the February date? What's the difference between the two deadlines?
So on the December 29th, the SEC may say that we need more time to make a decision on this ETF, and legally they can push it to the next deadline. The next deadline is the February one that I mentioned, at which point they need to make a final decision of yes or no.
Okay, now what makes you think that you're going to be successful? We've seen the SEC booting out many ETF proposals, including many from the Winklevoss brothers that have tried several times to get an ETF proposal through. What makes you think that yours isn't going the same way?
Look, there are a few reasons, Ran. One of them is just Van Eck history of building the right market structure for asset classes. So in 1955, John Van Eck, our firm's founder, built the first international stock mutual fund in the U.S. In 68, he built the first gold equity fund, and in basically the past 60 years, we have built market structure and funds for harder to access investment instruments. So we're doing the same for Bitcoin. And it turns out it's actually not an easy question, an easy task to do. So our ETF, what sets it apart is it's a physical Bitcoin ETF, so it stays true to Bitcoin. You own the underlying. It's fully insured. So if there's any theft, hacks, or losses, then the insurance covers it. The pricing that we use for Bitcoin comes from our indexing subsidiary, which is a regulated entity and provided the first financial standard and regulated indices. The ETF is institutionally oriented, so 25 Bitcoins per basket. And we're just trying to do the right things fitting into the U.S. capital markets. So hopefully our experience and our partner Sodex's experience in the blockchain space will help us get through the line. I do believe that America wants a Bitcoin ETF, and at this point the world wants a Bitcoin ETF. So we have quite a job to do here.
I agree with you that America and the world are ready and want an ETF, but we are all in the hands of the SEC. Do you speak to the SEC regularly, or is this a case of submitting a proposal and then just waiting and hoping that they're going to approve it?
So Ran, Van Eck has a 60 plus years relationship with regulators, and we speak regularly with the regulators. So we talk with them, iterate the process. It's a back and forth relationship of building the right market structure. I do think that the SEC is open to discussing improvements and proposals with market participants. And again, Van Eck has a history of discussing the hard questions, like what we've done with gold and international stocks and mutual funds, and some harder to access countries like Russia, Vietnam, and so on. So we have a history of doing this, and we understand that it's a longer process, but we're doing our best, and the regulators are open, and I'm really hoping that they'll realize that a Bitcoin ETF is their opportunity to regulate the space. So right now the Coinbases and the larger exchanges of the world operate in this semi-gray area, and the regulators don't really do much about it because they don't want to squash innovation, but at the same time they want to make sure that the capital markets stay intact, and I think the ETF kind of solved this question of not squashing innovation and at the same time bring some level of regulation to the digital asset space.
Now, if you remember the last batch of ETFs that was declined by the SEC declined them because of manipulation in the underlying asset. And then Commissioner Hester Peirce came out and said that the SEC actually had no jurisdiction to look at the underlying asset. And if they did look at the underlying asset for various other asset classes like oil or gold, they would never get an ETF passed. Is there anything about your proposal that's currently worrying you?
Well, I think the SEC's primary concern first was market manipulation, right? And so we've built a pricing source that's really hard to manipulate. So we're hoping that we solve that question. The SEC does not have direct jurisdiction to regulate the underlying spot markets. The CFTC does, and a number of regulatory authorities do. So I actually do not understand the problem there. Just yesterday, we've seen news coming out that some JP Morgan trader manipulated the commodities and precious metals markets for 7 years. Every market has some level of manipulation. What we tend to point out is that digital assets and Bitcoin is not unique. It doesn't have more manipulation than others. It might be a nascent or early asset class, but there are market standard tools that we can use to avoid manipulation. So I'm not every effort or is a concern. Like if there's market manipulation, there's a concern, but there are reasonable ways to hedge for that, and we have done everything that we can.
Okay, now work with me here. Let's fast forward to the 1st of March 2019. We've got the first Bitcoin ETF approved, 1 day old. Do we then see billions of institutional dollars immediately flowing into crypto?
Look, like right now, 90 to 95% of the space of the digital asset space are retail. So they invest on trading platforms with not many securities and safeties that investors are used to. So I don't know how much money the ETF would see, and hopefully you're right, Rand, that we'll see an ETF at March 1. But I can see it would be a few $1 billion ETF. We have gold ETFs in the few $1 billion range. There are gold ETFs in the few $10 billion range. So I wouldn't be surprised if a Bitcoin ETF would be in the few $1 billion range. And the important part there is just one sec. The important part there is if you have few $1 billion managed in a financial instrument, you have to make sure that it's not lost, it's professionally managed, an exchange doesn't run away with your money and all that. So that's one of my reasons to believe that there would be demand for a Bitcoin ETF.
I know when you guys presented a proposal internally to launch a Bitcoin ETF, you created a spreadsheet of sorts. And in the spreadsheet, you guys had internal projections of the potential uptake of a Bitcoin ETF if it was successful. In your projections, what kind of uptake did you forecast? And of course, we'll keep this between us.
So in our projections, it could be anywhere between 0 and a few $10 billion. It's a very wide range, and we think that everything depends on how the underlying market structure and regulatory approvals shape up in the next few months to a year. So it's hard to tell. We are optimistic, and I think if there will be a Bitcoin ETF, and hopefully it will be our ETF, then Bitcoin is here to stay for a century or more, and it will be multi-billion-dollar asset class on the ETF side.
Now, crypto seems to have caused big waves in a small island nestled in the Pacific. The president of the Marshall Islands is facing a motion of no confidence tabled by 8 members of parliament for, amongst other things, passing a bill which would introduce a cryptocurrency as the only legal tender currency of the sovereign nation. In September this year, the IMF tabled a report that urged the Marshall Islands to, quote, seriously reconsider the plan, saying it would increase macroeconomic and financial integrity risks. The IMF went further to say that all cryptocurrencies were at risk of being misused for money laundering and terrorist financing activities. The president of the Marshall Islands responded by saying, I don't see any indication of us being harmed, and this is not illegal. Our laws will not be tarnished. Peter Dietus, you're the Director of Economics at SOV, and after the IMF reports, it seems that the crypto may be destabilizing an entire country. Was the IMF a little bit hasty in publishing this report and criticizing the government, specifically based on the findings that crypto is used to finance illicit activities and terrorism? Were the IMF hasty?
When you read the IMF report carefully, it's actually a pretty good report. And given what information they had at the time, we didn't come out with a white paper at the time. So the information they had to go on was fairly cryptic. And given the information that they had, I think their assessment is pretty fair, because what they are saying is that the SOV may destabilize, depends how it is done. And in their view, they said very explicitly, they saw the rationale, but they felt that the upside potential did not justify the risks in their view, given the information they had at the time. And I think that at the time was a fair assessment.
Peter, what's changed from the time they got the information and today?
I think what has changed is we have done a lot of work on the Yokwe protocol. We have made sure that the currency is really compliant with key regulatory measures like AML and CFT. But if I'm totally honest, I must say they don't know that yet. And so we have to send them the papers, which we will do in the next couple of weeks.
And Peter, do you think if the IMF see the new papers, they're going to have a more favorable approach to their proposal?
Personally, I'm convinced, but of course, the IMF sort of works on their own schedule. The next official report on the Marshall Islands, I think, is due in about 2 years' time. So I think there won't be a new report coming out from the IMF, but we are going, once we have sent them the papers, we are going to engage and have discussions with them to try to see whether their evaluation actually has changed. And I'm sure it will change.
Now, Peter, some critics of SOV and the Marshall Islands have labeled this proposal as a scam, where a startup Israeli company was fleecing this sovereign nation island. Clearly, you don't believe that. How would the introduction of a cryptocurrency actually help the Marshall Islands?
Well, the SOV could help the Marshall Islands. Let me give you a very concrete example, which is sort of probably obvious. The Marshall Islands, they have a large population in the United States, and there's a lot of remittance flows between the United States and the Marshall Islands. And these remittance flows are actually quite large, and the cost of these remittance flows are typically 10% of the money wired currently. If that could be done with a SOV, I think those costs would come down. I mean, this amounts currently to 1% of GDP, roughly. So that's a lot of money.
Peter, why does the Marshall Islands need its own cryptocurrency? Why can't they just use Bitcoin?
Bitcoin is anonymous and has been in the past, less so nowadays, has been linked. So dubious activities, rightful or wrong, I can't really judge. But the SOV will have a control over the people who use the currency. There will be a whitelisting process, and you need to go through a KYC procedure to be able to use that currency, which means that from a point of view of the established financial system, it should be pretty acceptable.
Peter, would this be the first cryptocurrency that is a legal tender of a sovereign nation? And if so, should the crypto community actually get behind it?
Yes, that's the first one, definitely.
I contacted the presidency of the Marshall Islands for comments, and although they couldn't comment until after the motion of no confidence, they issued this statement. With the threat of the sea level rise, the end of US compact and termination of financial aid to the Marshall Islands in 2023, it's incumbent on the RMI government to explore opportunities to sustain itself going forward. The SOV is one such potential opportunity that the RMI is exploring. If done properly, it can transform our economy and sustain the needs of the country for a long time to come. The passage of the SOV legislation earlier this year enabled the RMI government to work with its partners and the US Treasury to ensure technical, financial, and policy concerns are worked out for the satisfaction of all parties before the SOV is publicly launched. In that context, I am hopeful that the SOV will be a successful venture for the RMI. The vote of no confidence is not about the SOV. It's about the so-called Rongeslap Atoll Special Administrative Region, or RASAR initiative, which is an effort by foreigners to take over parts of the country and turn them into a country within a country, where the RMI national government has limited to no oversight role. In the first place, this initiative is unconstitutional. Moreover, if allowed, foreign elements will use parts of this country for purposes of gaming and potentially illicit activities. In our view, the potential harm from use of the island outweigh potential gains. RMI is blessed with a democratic process under which those who have grievance against the government can come forth and voice their concerns. We look forward to dispose of the vote of no confidence on Monday and move forward with the business of the country and its people. So let's check in again next week at this time to see if President Hilda Hein is still in power. Let me know on Twitter if you think the SOV is a good idea for the Marshall Islands and if you believe that the crypto community should rally behind this. Until next week, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.